Hello and welcome to CMC Markets on Tuesday the 13th of August and the weekly market update. Summer doldrums, not really an awful lot to look at, but there have been some interesting patterns on a number of charts. Specifically, I'm going to look at the S&P500, I'm going to look at US 10-year bonds, also going to have a quick look at the cable and have a quick look at the Australian dollar. Now, I think the markets are predominantly being driven by taper talk. We saw last week, or we heard last week, Charles Evans, who's been a particularly dovish member of the FOMC, and he is a voting member, suggest that he was starting to lean in the direction of some form of a taper. Now, we've seen US retail sales come out slightly worse than expected this afternoon at 0.2%. Below expectations of 0.3, but the June numbers were actually revised up from 0.4 to 0.6. So the numbers aren't particularly great, but they're also not particularly bad. And I think in the context of the tapering argument, if we look at the following chart, which is a US 10-year bond chart, bond prices, we can see that the sell-off in prices in the US Treasury is pushing yields back up. And they're pushing them back up towards the highs that we saw at, in July and August, around about 2.7, 2.75%. Now, I've drawn a trend line through those price lows, as you can see on the chart, and you can see that we're approaching a significantly key support level. However, I think really the key level to keep an eye on the downside is that level around about just above 125. Which would roughly equate to around about a 2.75% yield. So definitely keep an eye on that. Moving on, let's translate that into a look at a US equity or a US index, and specifically the S&P 500 and the weekly chart. Now, from this weekly chart, we can see that there's a potential, and I do say this is a potential, a reversal pattern on the weekly chart. We posted the biggest negative week last week since the middle of June. But, and this is a big but, because what we really need to see now is a break below the level that I've highlighted on the chart with the horizontal line, which is the 1671 area. So to ascertain whether or not we've got a top in place, we really need to see a break below that key support area. Now, there is other US data out later this week. We also have industrial production, we have Empire Manufacturing, and we have Philadelphia Fed surveys for July and August. So we still have the potential to move the US dollar further. It's also an important week for the pound, and we're going to have a look at the pound and specifically the cable chart, because I think that could be extremely important given the fact that we have some very important UK economic data out later this week. Now, this morning we saw the CPI data broadly came in as expected, round about 2.8% year on year, a flat reading month on month. The key data point to keep an eye out, and there's actually two of them, is the unemployment rate. Now, the unemployment rate is going to come into much more important focus over the coming months, given the forward guidance that we saw out of the Bank of England last week. So expect a more intense scrutiny of the UK employment report. UK employment report doesn't really have the same thing as same cachet as non-farm payrolls, does it? Having said that, it is going to be more and more important, especially if the unemployment rate starts to edge lower from the currently 7.8% that we are expecting tomorrow. We also have the Bank of England minutes, and I think it'll be very interesting to determine whether or not Mr. Carney was able to get whole-scale buy-in to his unemployment threshold, or did he have to compromise? Did he have to compromise at 7%? Did he want to go to 6.5%, and did other members say, no, you're not going down that far, do you want to go to 7%? So I think that's going to be particularly important, the content of those minutes. Anyway, I'm digressing a little bit. We've also got retail sales later this week as well, so keep an eye out for them. Let's have a look at the cable chart, and specifically let's have a look at the daily chart, because I think that is particularly important. In my webinar on Monday, I talked about dark cloud cover on the daily charts and a significant resistance level just above the 155.50 level. We've managed to stay below that. There is potential for us to get a pullback on a break below 154.10. And I've drawn the trend line in from the lows that we saw earlier this year. That currently comes in around about 152.30. And I certainly think that there is potential, if we do break below 154.10, to come back to 152.30, especially so if US Treasury yields continue to edge higher. So very important to keep an eye on that particular dynamic, even allowing for the fact that UK gilt yields are also pushing higher. So there is an expectation of higher UK interest rates well ahead of 2016 at the moment. So let's finish up with the Australian dollar. Now, again, I talked about this at my webinar on Monday. The weekly chart has given us a potential, and I'm saying this is a potential reversal pattern, dark cloud cover on the weekly charts. So there is potential for a short squeeze. Again, you have to put it in the context of a stronger US dollar, but you also have to remember that Aussie shorts are at record levels. So any improvement in China data could actually underpin the Australian dollar given the amount of short positions there are out there. So we've had the potential for a weekly reversal on the weekly charts, and we can see that on the chart that I'm showing you right now. And it's very important to keep an eye on that. If we now drill down into a shorter term chart, a 4-hour chart, we can actually put a little bit more meat on the bones with respect to that. So let's look at the 4-hour chart. Now you can see where I've circled, there's a significant area of price congestion, and there certainly is potential for a bit of a pullback given the gains that we've seen over the past week or so. Now, at the moment, there does appear to be a level of support around the 91 area. We could actually come all the way back to the trendline support that I've drawn in on this 4-hour chart, which currently comes in around about the 90.50 area. So I think as long as we hold above this trendline support, then the potential rebound could well have a bit more traction in it. And I think the key level that we need to keep an eye on is those July highs that you can see on the left-hand side of that area that I've circled around about the 93 area. That's really the big level on the Aussie that we need to keep an eye out in the long term. So on the upside, potential resistance at 93. On the downside, trendline support currently coming in around about the 90.50 area. Okay, so that's it for this week. Once again, thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.